Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to have a quick trade review for the setup in GBPUSD that we executed within the week, and we're also going to check the Euro USD. So this is the 4-hour time frame in GBPUSD, and if you're interested in following our trade setup, you can do well to join the free Telegram community. Link to the free Telegram community is made available in the description section to this video. So let's check the daily time frame. So here in the daily time frame, this was Friday candle delivery, and I called our attention to the weekly fair value gap here. If we see the possibility of price not respecting the daily bullish order block, then we should see how price was going to dip down into the weekly bullish fair value gap, and we have the bullish continuation to the upside. So what we can clearly see is that on Monday we had bullish impulse, but then price returned to mitigate the daily bullish order block, and then we had the bullish movement. And based on CRT, we can see how price swept this low point, gave us what bullish movement. Price further gave bullish movement on Wednesday, taking out this buy side liquidity and volume closing below, and now we can see Thursday delivered to the downside. And this is price reacting at the daily bearish order block, a sponsorship candle here. So let's go to the 4-hour time frame and begin to look at what we looked into, and then we took our trade setups. You can check the free Telegram community to the chart setups that were shared and also the outcomes. All of these are available in the Telegram community. So what we can see from the 4-hour time frame is how we had the movement of price to the downside. We can see we had this accumulation. Price gave us a manipulation, taking out sell side liquidities, return to mitigate this bullish order block here in the 4-hour time frame, and we had this impulse to the upside. Here was price delivery on Friday to the downside, and then that ended the previous week. So for the coming week, what we saw was how price here gave us this impulse on Sunday. We had this impulse to the upside. So basically, structure is we had the impulse, we had the inducement liquidities resting here. Price gave the pullback, creating this higher low points, and then price gave the impulse to the upside, creating a higher high. So we know this is the inducement liquidity, and we can see how price returned on Tuesday and Monday down to mitigate that zone, to sponsor bullish movements. So what we can now see is that price returned into the daily bearish order block. And now we can see the rejection candle we had. And then we had, now this was Sunday. Sunday sponsored the bullish movements for the first 4 hours into the daily bearish order block. And we saw this rejection, taking out the buy side liquidity, volume failing to close above, meaning that what the institutions are respecting the sponsorship zone, the daily bearish order block. And we had the fall of price to the downside to mitigate the daily bullish order block. So it was from the 1-hour time frame. Let's go to the 1-hour time frame that I pointed this to us. We had this institutional order flow. So I said when we see price doesn't dip anymore lower to the weekly bullish fair value gap due to the structure we are seeing here in lower time frame, and in Confluence is the daily bullish order block, then I told us to anticipate how price will mitigate this institutional order flow, and then we framed the bullish movement, if you can vividly remember. So what we can see was, we had this fair value gap. Friday dipped into that before we had the beginning of the new week, and Sunday gave us this impulse where this served as the inducement liquidity, because we had this impulse to the upside that broke the structure, the pullback before this another impulse to the upside. Now we can see how price dipped to take the sell side liquidity. So what we can now see is, this happened so fast that we could not execute a trade here. Sunday gave us that fast impulse bullish movement. So we waited to see the return, and Monday gave us this return to the downside. We didn't really trade the sell move. We did not trade the sell move. We're looking towards the bullish movements. And now we can see that Monday dipped lower, mitigated the institutional order flow. We get it, guys. And what we can now see was the SMT, the smart money techniques, in Confluence to Euro USD. So we wanted to look at the anticipated bullish momentum, which of the pair was going to frame and give us the more impulsive bullish movements. So let's get back to the 4-hour time frame. So here in the 4-hour time frame, what we can see is where we had that institutional order flow in the 1-hour time frame. We can see we had this down close candle before the bullish movement that broke structure here, though we can see we do not really have volume here. The volume is quite little here. So we can see now the dip of price. This was Sunday movement. The first 4 hours when the market opened gave us this bullish movement, mitigating the daily bearish order block and give the bearish movement to mitigate our bullish sponsorship zone. And we saw this movement to the upside. So what we now clearly saw was we had price give us this up close candle, down close candle, took out sell side liquidities, and we had this push to the upside. So clearly from the 1 hour time frame, we would clearly see the structural perspective here. So let's go to the 1 hour time frame. So in the 1 hour time frame, what we can see is we can see the fall, the pullback, price fell, created this low, pushed to the upside, price fell, took out this low and took out this low, giving us the breaker here, because this is the last up close candle that sponsored the bearish movement that took out sell side liquidity, and we had this bullish movement to the upside. So we know that the structural perspective here is bullish to the upside. Price to cut, inducement liquidity. So upon the mitigation, we look into the internal structure we can see here. So we had this impulse to the upside, and now price came here creating this choppy price delivery on Tuesday. So we have relatively equal high points, liquidity pool resting here. So we had the impulse, the pullback that created the swing low, and we had price push failing to take this high, and in extension going higher to take out the external buy side liquidity that was created on Sunday. So what we can see is that now price return. So we know when price return to the downside, it's going to seek the sell side liquidity to mitigate the sponsorship zone, and we have the bullish movement. So basically what we can see was this fair value gap, and in Confluence is the breaker block, and the breaker block was within the optimum trade entry level. So we had the bullish breaker and we had the fair value gap, which you can clearly see, and we had the OTA. When we use the FIB tool, you're going to clearly see that from the low point here to the swing high point here, we can clearly see that the price dipped below equilibrium into the discount PDRA. So what we can now see is the candle formation. I'm not going into deep details about the candle formation. So we had the fair value gap that was created before price for the sponsored bearish movement to take out the inducement here. So we have that acting as an inversion fair value gap, price mitigating our sponsorship zone, and we saw the bullish impulse to the upside going against the fair value gap, the bearish fair value gap. That was the establishment of our inversion fair value gap, and that framed our perspective, because we know where is price aiming at. Price took out sell side liquidity. We have pools of buy side here and the external buy side. So we should expect to see the impulse bullish to the upside to take out this relatively equal high points and to take out the external buy side liquidity. That was just the anticipation. And what we can now see, let's go to the 15-minute time frame. So in the 15-minute time frame was where we began to anticipate our models and what we can look forward more into. So we can see the 1 hour inversion fair value gap, and clearly what we can see is that we had a change in state of delivery. Now we can see price return to mitigate this bearish order block and give us this movement to the upside. But then price again for the return into the 1 hour inversion fair value gap. I'm not going to explain deep into entry models here. I just want to give us a quick review. And now we can see the bullish movement. So this was our execution points, the inversion fair value gap. And then we had our stop loss below here. And we can see how price tanked to the upside, taking out this relatively equal high points and the external buy side liquidity. So clearly this was the first trade execution here based on what we anticipated to see. So we know we had the Asia session. This is the Asia session range, and now price dipped more lower and took out the Asia session low. This was the Asia session low points, mitigating the sponsorship zone. In Confluence, you can also see in the 15-minute time frame we had this fair value gap, price mitigated, and we saw impulse to the outside, price return to the inversion and further sponsor more impulse movement to the upside. So let's get back to the 1 hour time frame so that you can clearly see that, to reduce the noise from the 15-minute time frame. And now we can see we had that bullish movement to the upside back into the daily bearish order block. So we can see now price took out this relatively equal high points, and in extension price took out the external buy side liquidity. And this was the delivery that happened on Wednesday back into the daily bearish order block. And now we can see price fell to the downside. So what we saw from this other structure that was created on Wednesday, internally, what we can see is we had this mitigation block from the 1 hour time frame. We had the mitigation block. So I also took entry from this point here. You can check the free Telegram community. The setups are all there. So internally, what we can see, the 4 took out liquidity, price push, price return into the 1 hour inversion, sponsored the bullish movement that took out this relatively equal highs and then took out the external buy side liquidity. So we know clearly that this is just an internal structure. This is just an internal structure. This is an internal structural inducement. So clearly what we know is that we had the low points here. We had what the push, price gave this pullback. This is a deeper pullback. This is the low that sponsored the movement that took out the external buy side. So clearly, if price is returning to the downside, we know clearly that this is the ideal drawn liquidity, the ideal sell side liquidity, which will be the drawn liquidity. But we know that from lower time frame perspective, more lower time frame perspective, we can see within this movement, we can see sell side liquidity. So let's check the 15-minute time frame. So here in the 15-minute time frame, you can see we had this movement, a pullback, we had the push again, a pullback, a push. So you can see we have this inducement and we also have this engineered liquidity. So back to the 1 hour time frame. So we had the mitigation block here because this is not sponsor movement to take out this liquidity here, and we had what bullish that took out the relatively equal high and the external buy side. So I expected to see a buy reaction at the mitigation block, because in Confluence we also have this down close candle that sponsored the bullish movement that took out this liquidities. So I expected to see buy reaction. So I executed a buy movement within this price level. And now we can see how price pushed to the upside. Let's check that from the 4 hour time frame. So in the 4 hour time frame, what we can just see is we just had this candle wick. Price just dipped into the candle wick, mitigated it, and the first 4 hour gave us what? This bullish movement on Thursday. First 4 hour on Thursday gave us the bullish movement to the upside. Now I was anticipating to see price take out this buy side and possibly in extension this buy side. But then price did not. We had a strong reversal. You know clearly that the ideal inducement becomes this low point. Let's check that from the 1 hour time frame. Becomes what? This low point, because this is just an internal structure. A push, a fall, a push, price fell, took out this and push. So this is the ideal inducement. Looking at from the low, this is the impulse. Price dipped, the deeper pullback before the impulse that took out the buy side, and this internal liquidity, there's relatively equal high points. So we had this buy move, we took this buy move, but then, you know, anticipated a sweep of this and the possibility of it sweeping this before the bearish movement, but then the bearish movement occurred. When I shared the setup after the price triggered my entry, I signified taking partials from this bearish order block. So what framed the entry here further was in the 15-minute time frame. Let's get to the 15-minute time frame. So what we can clearly see from the 15-minute time frame is we had this fall to the downside, price giving us this bearish movement. So we can see that this is our what? Asia session. Price return mitigating the zone identified from the 4 hour, because we can see inducement, engineer liquidity here in the 15-minute time frame. So if price seek orders, then we should see the possibility of a reaction. And this is in Confluence to an unmitigated mitigation block from the 1 hour time frame. And what I saw was how price here swept liquidity, and we had this movement to the upside. And clearly we can see this is the Asia session low points. Price now gave us the opening price. This is the 12 a.m. opening price using the New York time zone. And then we had what? The bullish movement. So I took the entry when I saw price here, after price reacted at this fair value gap, creating this bullish order block. What we can see is this tweezer candlestick pattern. So I expected to see this pullback. So I executed an entry here. The stop loss was here and traded price to the upside. And the setup was, the entry was here. But then due to the fact that I missed to take that here, but then upon confirmation of the sweep of liquidity and the bullishness here, and when we go to a lower time frame, we're going to see a market structure shift here. I'm not going into that lower time frame. And then we had this change in state of delivery and price violating this bearish fair value gap, creating this bullish order block. So I anticipated to see bullishness to take out this high. And this was where I marked out price consideration for partials. But then I was hoping to see how price would take out this buy side. But then we can clearly see that London session created the high and New York gave us the bearish reversal to the downside. So this is just what I want to show us guys in the GBPUSD. So we're also going to look at the Euro USD pair, and then we'll look at also the confluence of the SMT, because we anticipated bullishness because we had GBP created this low, the Euro USD created a higher low point instead of a lower low as also the GU. So we expected more bullish momentum in EU due to the fact that EU created a higher low and not a lower low. So guys, this is just a very quick one. I didn't go into details like trying to look at the entry patterns. I just wanted to give us a review from a higher time frame perspective. So cheers guys, and God bless you all.